Hello everyone, welcome to our last minute top tips for the CFA program exam. Thank you for joining me. My name is Peter Menzies and I'm a CFA program instructor here at Fitch Learning, and we'll be spending the next session discussing really how best to get the most out of the exam now that you have done so much hard work for. Of course, we really need to ensure you get the best out of all your preparation and do very well coming now in December. So let's have a look at what we have for you in the next session. It will be basically looking first at the calculator, because as you can imagine, getting the most out of the official program exam calculator is the key to success. Once, of course, you know what you're doing, the key thing is to do it efficiently. So the calculator is there to make sure you do things efficiently. If we begin here, our top tips, our session coming up will cover the calculator, predominantly reprogramming it, but more importantly, understanding how to use it to get the most out of, again, the process, the exam. Strategies for approaching the exam. So, you know, how best to make sure you get to maximize your chance of success. What I often found myself, having done the exams about 12 years ago, is that you often panic a lot. You panic yourself in the thing that you haven't really done any work, or you haven't done enough work. But really, if you've stuck it through and gone through all the material, then you have done enough work because you've spent months on it. And really now it's just about consolidating your knowledge, and be confident that the knowledge is there because it will come back to you. So we'll talk about that. Also the crucial formulae. There are crucial formulae that you simply must know. We'll just have a checklist and hopefully you'll say, yes, I do know that formula, because there are calculations we can't avoid and there will be formulas that we, again, just have to know. In many cases, though, you won't have to know a formula because the calculator will give it to you as an output from a function. Tips preparing for the exam to avoid unnecessary stress. As I say, I remember myself, didn't have these tips when I was doing level 1, for example, and I certainly would have wished I was told this, cut out so much unnecessary aggravation coming to the exam. And then we'll also look at some practice exam questions. So just to see, exam standard, can you do this? Just keep yourself sharp, yeah? So that's our point, everybody, and what I have for you is, hopefully you know this very well, the exam format in December. We are going to have 2 papers, 9 till 12 in the morning, and then 2 till 5 in the afternoon. You're going to have 2 3-hour papers of 120 questions. And so it is 1.5 minutes per question, and every topic will be covered in the correct weighting in each session. Now, the good thing about that is that you are therefore given a full chance, basically twice in the day, to show that you know your material across all topics. So I must admit, when I took the exam, the feeling I got from it was that I was satisfied that because I had been comprehensive in covering everything, I was able to show that I'd covered everything. It wasn't a case of, oh, you're just isolating one topic and I can't show how much extra knowledge I have. It showcased everything because it made me, cover everything. So I liked that. In levels 2 and 3, that isn't the case, but level 1 it will be the case. Every question is standalone. There's no negative marking. So again, you're given one shot. Each question is individual. Have a go, and you'll be sure that the next question will be totally independent of the last one. And if you got the question wrong, well, never mind. You just don't have any negative scoring. That's also good. So your performance on the exam is seen as a total performance over 6 hours, not per 3-hour sitting. So as some people have a very good morning, but then not so good an afternoon, get through, and vice versa, still get through. Now, if we just double check here, first tip for passing level 1 is definitely to know all the relevant functions on the official calculator. Because you'd be surprised at how many people do attend the exam with all the knowledge, but they don't know how to get the best out of the calculator. So they end up spending longer than they need to, for example, working out standard deviation or trying to work at some, amortization schedule for accounting. And they're doing it manually, taking 5 minutes when the calc can do it in 1 minute. So that sort of added time used adds up to maybe not finishing the exam and also therefore not passing. So that's why it's really important. Now, if we just have a look here, you can see, yes, we mentioned know all the relevant functions, including the time value of money. So, of course, we've got the calculator on the time value of money. We're talking about, the third row there. So all, of course, those key inputs, N, and of course the number of periods, the yield, the present value, the payments, the annuity, the future value. And I'm sure you've done that countless times, but remember the basics. Clear everything before you start a new question. Press the second button and FV, clear the settings, clear everything, and then input again. iConv is also great, isn't it, for talking about going from the nominal rate to an effective rate, or, of course, vice versa, nom to effective and back again. That's accessible through the icon function, interest conversion. Second button, number 2, will get you that. And then for data and stat, well, remember data and stat. Data is for adding or putting in the data worksheet, second 7, and you get your X1s and X2 entries. But when you press second 8, you should remember always be in one variable mode. Check that you are in one variable mode, otherwise you're not going to get the right information. And on variable mode, of course, you can get then your X bars and your SXs and your sigma X's and so forth. The calculator will give you standard deviation. It won't give you variance, but you can, of course, square the deviation to give you variance. We have NPV and IRR, of course, because that's via the cash flow function. You've got to put your cash flows in first. So CF button. And just remembering that, when you put the cash flows in, it's a bit tricky. You have to press the NPV button once you put the cash flows. It then asks you for the interest rate, enter that, and then you use the arrows, and you will be able to compute the NPV and the IRR then quite efficiently from that. Remember, the IRR is not well behaved. In other words, if you have multiple signs in your cash flow, an IRR may not be available, or multiple IRRs may be available, the multiple IRR problem. Now, amortization, well, guys, of course, that's going to be especially for the accounting. It comes in bond accounting, it comes into lease accounting, the amortization schedule. So we want to know, because if you press the second button and you press the PV button, it asks you to say when do you want the starting period to be, P1 equals, and when do you want the ending period to be, P2 equals. So you've got your, which period are you analyzing, P1 equals and P2 equals start and end of that period. And from that, of course, you can get all the key stuff, isn't it? You get the balance at the end of the period. You can get the principal that has been amortized in the period. You can get the interest charged in the period. So everything, basically, which the examiner would want, you can get so quickly just by, of course, entering first. You've got to remember, though, it comes, of course, first you have to enter your TVM information and compute something. And then you go to the amortization function, and you can, of course, analyze the bond payable or indeed the lease payable if that's what you need. The break-even function is for corporate finance. Remember, the quantity of break-even, the break-even quantity or the operating break-even quantity. For that, you press the second button and the number 6. And there you'll be asked input what the fixed costs are. So, of course, that's total fixed costs, what the variable costs are per unit, and what the price per unit is. And, of course, when you get to the profit input, you're going to select 0. And then, of course, then you can compute what you need, which is the break-even quantities. Okay, from that. So profit is 0, and quantity, you can then CPT and work it out. And, of course, when you're doing the fixed costs, if you're doing total fixed costs, then it could be fixed operating costs, it could be fixed financing costs. But if you're doing operating break even, of course, you're just putting the fixed operating cost. That's basically the difference, right? So I hope that, guys, is more just a refresher of what's in there, but that's, you know, like key functions, right? Now, question practice and time allocation, of course, is crucial. I always say to delegates that 2 weeks before the program exam, you really should only be doing one thing, which is timed question practice. You'll be surprised at how much comes back to you just by doing questions. Don't be tempted to keep reading, because we're all tempted to do that, just to keep reading something, just to make sure I'm really sure about something. I'll do questions a bit later. Just do the questions, because that forces you to bring all your knowledge into that 3-hour sitting, and it is tough. So the sooner you start doing that, the quicker, of course, you'll be ready for the exam anyway. And you'll learn what you need to during that process in those last 2 weeks as well. So, yeah. Now, yes, question practice. Guys, the allocation of time, of course, is 1.5 minutes a question. Right? That's as it breaks down. Now, some questions will take more than 1.5 minutes, as you can imagine. It could be that you're doing an ethics question. It could take you 3 minutes. Right? Let's be fair. But then you'll get a quick, calculation, bash it out in under a minute. So it weighs up. On average, it'll be about, it should be enough time. The well-prepared delegate should have about 10 minutes roughly to spare at the end of each sitting. You do have just enough time to finish comfortably, but you won't have loads of time, I must say. Practice all questions to correct time allocation, though. Always read the requirement first, right? What do they want you to do? And I would say, going back to my ethics, the ethics questions, because that's, 15% of the exam, and they are the first 18 questions of the exam because it's done by sections. It's done by study sessions, and ethics is the first study session. So you can imagine the first 18 questions, you might really try to be, with full energy, very thorough on those questions and really take your time, but you get bogged down. Because they're time-track questions, for sure. The ethics questions are time-track questions. You're never going to be exactly sure it's right, and spending 5 minutes or 2 minutes on an ethics question usually doesn't make much difference. In fact, you might talk yourself out of an answer. So in my opinion, be strict with your timing, get through the questions with the time allocation in your mind. You can always move on and leave it to the end if you need to. I mean, especially for ethics. Seems fair to me that you would do the quick questions first, and then the ethics, maybe you might leave to the end. It's still worth only 1 mark per question. Okay, now, I'm going to say example on fixed rate bonds. And you may be recognizing, as we do always put the syllabus material, where is it coming from? So this is study session 15, reading 53, and learning outcome statement F. But basically, this is the bond valuation reading in fixed income. Fixed income is worth 10%, and this is one of the learning outcome statements, which is saying we should be able to compare annual yields with different periodicities. Okay, so this is going to be a good check if we can use the calculator efficiently as well. So firstly, the topic is that you as a bond investor want to compare bonds and to be sure that they give you the equivalent effective return. So the formula here is using annual yield referred to as an APR, which stands for the annual percentage rate. An APR is a nominal rate. So in bond markets, we're used to that, giving us nominal numbers. But if you want to compare two nominal rates and say, well, are they equivalent to each other? What you're really saying is, are they giving me the same effective return? So there's the formula for working out an effective return from a nominal rate. You may recognize that bit, guys. You take the nominal rate, right? APR is just nominal, divide by the number of periods that you are, in fact, compounding, and then compound by those number of periods gives you the effective return. If you're doing that for a bond which pays M times a year, and you're comparing it to a bond which pays N times, let's say APR M is like 2 periods, and APR N is for 4 periods, you're saying, well, M would be 2 and N would be 4, but are they equivalent? Only if they give you the same effective return. Now, the there are long and short ways of handling a question coming up here, but let's do the smart way. I think it's just to use the icon function. So guys, here we got a 6-year, 4% semi-annual coupon payment bond, priced at 103 and for 100 par. Now, in the exam, they would not tell you what the yield might be. They might give it to you, they might not. I mean, let's say maybe not. But just for ourselves, we could work out right now what that yield is and go from there. So, as with me, if you want to just use your time value money buttons, so your N, I, or Y's and all that, you want to use that. Okay, so we're going to slot in here. You've got 12 as the number of periods, right? You've got 2 as the payment, because that's 4% divided by 2, and of course 6 years times 2, so put that in there, 2 the payment. You've also got the present value, 103.21, so we can slot in that, 103.21, PV. You've got 100 as the future value, that's for that. And then, when ready, compute IY. Let's, of course, just see that we can get this number ourselves. Now, I get 1.70199. Hope you got something similar there. Now, that is a semi-annual return. But if they are saying, well, what is the APR? APR is always a nominal rate. So this needs to be doubled, times 2, because it's a semi-annual bond, right? So this would then give me 3.404, right? Is that okay? Now, of course, that matches what we're told here as well. So it does actually say, yes, APR, the quotation is 3.404. Okay, we got that. But that is called the annual percentage rate for a bond paying 2 periods. Now, if you want to convert it, as it says, you've been asked to convert to a monthly periodicity, what will the yield to maturity now be? What will the yield on the bond be? So you could, according to our top box formula, so APR 2, if I divide that by 2 periods and square it, okay, that'll give me the effective return. Then I'm going to solve for the APR 4, or sorry, APR 12, which gives me that. And so you could go through the rigmarole of saying the effective return, let me take the 4th root, let me take the, let me take the 12th root, and then we multiply by 12. You could do that. But the smarter way, I think, is just to use the icon function. So because if we want to just check this out, let's use icon, okay? Let's see what our process is. So remember, second button, number 2, icon. Now, the nominal rate is the rate currently that we have, 3.404. Let's just start with that. 3.404, enter please, right? And we are then going to have to do the step is what is the effective return? So up arrow, compounding periods a year should already be 2, I think, by default, but you can enter 2 anyway if you want. And then up arrow, what is the effective return on this semi-annual bond? That's the first thing we're doing. So effective, press compute, and hopefully, let's do that here. I'm getting 3.433. 3.433. Now notice that's one of the options already given. You see, that's already one of the options. But that's not the right option. That's an effective rate. We don't want the effective rate, we want a nominal rate. We want a nominal rate for a bond which would pay 12 times a year. So once you've got your effective, right, we're now going to press the down arrow and say compounding periods a year should be 12. We're going to change the compounding periods to 12, enter that. And then down arrow, nom, now recompute, right? Nom is going to be recomputed for what the APR should be if there were 12 periods a year. Press that. How are we doing, guys? Got it? 3.380. So this is saying that the equivalent APR for a bond which pays 12 times a year would be 3.38%. And that is then the final answer, right? Because that's saying these two are equivalent to each other. Now, according to that top box formula, if you were using that, you'd say 1 plus the semi-annual APR, 3404. If I need to, of course, adjust that, you're dividing by 2 there, squaring it as well. Yeah, and that is equivalent to the APR 12. Yeah, 3.38% divided by 12 to the power 12, 3.404 divided by 2 to the power 2. They should both give you the same effective return, which we know is this, 3.433%. Okay. So guys, there we go. Option A there is correct. You can see the distractor is always good though. 3.433 was the effective return. We didn't want that one. And 3.458 actually is the return if you compound over 12 periods, the semi-annual nominal rate. So in other words, you can get the other numbers if you just make one mistake or you misinterpret the question. So they're always good distractors. Always good distractors. Okay, how was that, everybody? Was that all right? Getting the best out of the calculator, being quick, being efficient. Hope that's okay. Okay. Now, really, what we're going to do is turn attention to accounting, because some exam-style questions which are key. Accounting, of course, is the biggest topic, isn't it? 20%. And comparisons of IFRS and US GAAP are common. IFRS is the assumed standard that we would focus on because, of course, that's the one used by most of the listed companies in the world. But US GAAP comparison, of course, the biggest capital market in the world is singularly is US, of course, compared to US companies. And what we see here is cash flow. So in study session 8, reading 27, that's the cash flow reading. We're asked to compare and contrast US GAAP and IFRS. And one of the main things is that IFRS is giving you some choice about where you keep or can put a cash flow. Whereas US GAAP is strict. There's only one place you can keep something. So let's just see, you guys, what you remember here. Okay, let's start with interest paid. Do you remember interest paid? So interest on bonds, for example, interest on leases, CFO, right? So CFO out, IFRS, CFO out is okay, slash CFF. Now that means being consistent is important, but you have a choice. You might just keep as a financing. In fact, interest received, of course, same logic really. Now US GAAP CFO in, right, was IFRS CFO or CFI because it's on investments. So the inflow can be in either or. Right? Dividends. Let's do dividends received first. Okay, so let's copy our topic there. So US GAAP says it has to be a CFO in. IFRS, it can be a CFO or CFI in. So that's consistent with interest received. The odd one out, I suppose, really is the dividends paid. Do you remember why it's an odd one out? Because US GAAP says CFF. I suppose the logic here is because it's a discretionary payment by the management. It's not a mandatory payment. It's their choice to pay a dividend, and therefore it does not get deducted out of operating cash flow. It's not part of their operations. A purely financing decision if they want to. IFRS is, I would say, consistent across the board because it's still CFO or CFF, out. So basically, IFRS is doing the same thing across the board, giving you a choice of putting everything in CFO or putting it in a financing or investing activity as logically it would be. US GAAP is strict, but that's dividends paid breaks the mold there, so be wary about that. CFO usually, except for dividends paid. So these things are really important, guys, okay? Being able to answer that stuff quickly and efficiently. Now, we got another cash flow question for you. Okay, so keeping ourselves, again, sharp. This also from the reading at, say, session 8 there. Now, they give you a snapshot of information for cash flows. Analyst is trying to work out cash flow from financing. Cash flow from financing, everybody, so CFF. Now, why does the US GAAP mention, why is that important? Is because, as we just mentioned on the previous slide, there might be categories which only come into US GAAP and not IFRS, vice versa. So that obvious example, they have dividends paid. Dividends paid would be a financing cash outflow, not operating. If they had said IFRS, of course, we would not include, or I should say, we could include, and that would be ambiguous. They'd have to then tell us what they want us to do there. But US GAAP, we know that it has to be included in CFF. Now, let's have a look check, guys. Here we've got the information, dividends paid. So that's, see, immediately the one to focus on. Is that a financing cash flow? Absolutely. That's a CFF outflow under US GAAP for sure. Common stock issued, that's of course a secondary offering after the IPO, like a placing or rights issue. So under both standards, basically, IFRS and US GAAP, that has to be a financing activity. It's cash raised. Equipment purchased? What's that? Equipment purchased like fixed assets, I suppose, yeah, PP&E. Well, wait a minute, fixed assets, that's CFI, isn't it? So a purchase would be CFI, but outflow. Bonds issued, back again, CFF. But CFF in. Now, what about fixed assets sold? Fixed assets sold for 60 would be, of course, cash in, but a fixed asset, CFI, right? They give information about the original cost, depreciation, 140. That just means the net book value could be worked out there if we wanted to. That's going to be a net book value of 60. So basically, it's a net book value of 60, and it was sold for 60. There wouldn't be any profit on that sale, but it would be a cash flow of 60. And then account receivable, wait a minute, account receivable decreased by 60. What does that mean? That means that you've got cash in from your account receivable. You're collecting cash. So surely a CFO inflow. Inventory decreased, selling inventory. Inflow. Payables increasing means I'm not paying people something, so I'm saving my cash, right? All the CFO. Payables decreasing, you are paying off your debts. So you can see I don't need those items. But you see how long I took to go through that. In a quick exam set, you would just say, know which ones I need, boom, boom, boom. I just need dividends, I just need common stock, I just need bonds. All the rest is a distractor. That's why I kind of went through to show you. You can be thorough, but when you know what you're talking about, why do I need to say if it's a CFO or if I know it's CFO, who cares? Boom, cancel it out. I don't need to look at the numbers. Fixed assets sold, 60, who cares with net book value? It's not a CFF, it's a CFI number. So it's just about looking at it efficiently. All I needed was CFF is an equal to the common stock issued and the bonds issued. So 160 bonds, 40 common stock, minus the 60 of the dividends. So you can see that's going to give us 140. Okay, so just an example, guys, of you can be thorough when you're studying, but in the exam, just be efficient. If you know you don't need something, just scrap it. Scratch it out with your pencil. Just put a line through and say, didn't need that, move on. Okay. Now, Hope that's okay, guys. Let's see other top tips now. Top tips for passing: make sure you know how a topic will be tested. This is often a problem where you don't read the command words on the learning outcome statements. We always urge our delegates to read that, because if it says explain, for example, explain what is skew, they clearly are not asking you to calculate skew. So don't learn the formula for skew, which is of course related to the the tails, left or right tails in a distribution. You don't have to calculate that skew. You just need to know, oh, positive, right? It's a right tail. Negative, left tail. There's a possibility of an extreme gain, positive tail. There's a possibility of extreme loss, negative tail. So, just knowing how to interpret is important, not actually calculating it. So, like that sort of thing. Do not waste time on any form that will not be tested as a calculation. There we go. Same idea, really. Yeah? So once you know what the command words are, clearly you won't learn formulas which are not going to be tested. That's, again, sort of a related point, isn't it, really? Now, key formulae examples. I think, oh, right, okay. So these, in the sense that we should know what the formulae looks like, what it is, because, again, you might have to calculate this. So we just check, guys, from the top there. Portfolio standard deviation. Double check here. Only a 2-asset portfolio standard deviation. Yes, very important. Okay, so not that you have to run through it again, but weightings are involved, right? Weight A, weight B, let's say. Weight A squared, weight B squared. Sigma A squared, sigma B squared. Why do we use these terms? Is because you have to add variances, not adding standard deviations, and therefore you also use squared weights. Plus 2 lots of covariance between A and B. In other words, look for the joint movement of the 2 assets, and note that covariance is a formula all in itself. Okay, so we might not be given the covariance on the day. Now I must say though, this is not this is variance we've got here. So what you'd have to do is take the half power on that and square root it. But my opinion, always use decimals for your calculations here. Use decimals and use your store buttons. Use your store buttons. So STO on the calculator and RCL, store and recall. You can choose digits 0 to 9. Okay, do that. And just talk about covariance down here. Of course, there's the covariance formula. You can actually get that by just taking the correlation between 2 stocks and multiplying by the standard deviation and the standard deviation. So you see, just saying, they could, of course, give it to you in that format that you have to derive covariance yourself from correlation and then use that in the 2-asset formula. So that's quite long-winded, but very important. Okay, so guys, that's, for example, important. Standard error of the mean is for the, mean, so the distribution of sample means. So the DOSM, distribution of sample means. Standard deviation is called standard error. It's calculated as, well, either you can do sigma over root n, or if you don't have sigma, S over root n. Yeah, that's going to be, of course, to work out the your left and right points on a confidence interval, right? Your limits. Sharp and trainer ratios and Jensen's alpha. Well, guys, I mean, basically, remember Sharp, portfolio versus the risk-free rate divided by standard deviation of the portfolio, whereas trainer compares to the beta of the portfolio. So the difference between Sharp and trainer is in the denominator, and ranking portfolio performance, excess return to the risk-free rate. Jensen's alpha, that's the portfolio return minus the CAP-M required return. And if you're not, I think you CAP-M minus CAP-M required, what was that? Well, CAP-M is a formula in itself, down the bottom here. Remember, it's about looking at how much return you should be getting for the beta risk that you have taken. It's a diversified portfolio assessment, but it is CAPM risk-free rate for taking no risk, plus the beta of the portfolio, and then the of course the risk premium, as they call it, the equity risk premium, is RM minus RF. So that, of course, would be, of course, a key input to Jensen's alpha. Is there alpha? Jensen is positive, outperforming; negative, of course, underperforming. For the beta risk, that is. Okay, guys, we've got duration formulas now. I won't write those all out, but guys, Macaulay duration is the one given in years, remember? And modified duration is given as percent. What is the average time to cash flows? Macaulay. And what is the percentage exposure for a 1% movement in the yield? That is modified duration. And the thing is, of course, they're both based upon, especially modified duration anyway. It's a linear approximation of the change. It's a linear move approximated. It's a tangent to the actual price yield curve. But the convexity approximations will basically give you the curvature. Give you the curvature, if you like, adjustment. So, as you can imagine, generally positive convexity for bonds. You have to add something to the modified duration output to give the right to give the right exposure. But in my opinion, focus, guys, on the narrative as well here. You can always pick a lot of questions just from being able to understand what is going on. And just to say with that, when you work out the percentage change in the bond price, remember it's going to be minus sign times next to duration times the change in yield plus a half the convexity times the change in yield squared. So how you use duration convexity is key, not just being able to calculate it, but how to use it. To duration, it's always a negative sign next to it because it's an inverse impact on the price. Yield goes up, price goes down. And just remember to start the half sign next to convexity, but it's yield squared because convexity has a second order effect. Okay, so things like that. Dividend discount models, guys, they're of course mainly Gordon's growth model. You remember inequity valuation here? Inequity valuation is pretty much saying you've got to be able to work out the price of a stock based upon the expected dividend over the required return minus the growth rate. And of course you can have multi-staged, right, Gordon's growth models where you have initially dividends growing quickly and then they settle down. But it's all dividend valuation for equity. And the weighted average cost of capital, well, guys, the WACC, of course, you have to be ready to work out the components. You have to be ready to work out the costs. Remember, generally, the formula, the weight of debt times the cost of debt, but tax adjustment on that, weight of equity times the cost of equity, and cost of debt typically based upon yield of a bond, and cost of equity based upon either a dividend discount model approach or Gordon's growth, CAPM approach, and you can then work out the cost of equity. But only because debt is tax deductible, as you know. That's why you have 1 minus T on that one, right? The marginal tax rate. Accounting ratios, guys, there's plenty of those. But in my opinion, when you go through the accounting, you'll see, of course, which ratios are coming up again and again. You need to understand how an accounting choice, of course, as an analyst, how that affects your key ratios like ROE or debt to equity or margin or something, right? So knowing the impact on the ratio, more important than a calculated ratio. The bond analysis, though, of course, guys, is specifically looking at ROE. Remember, that is focusing on how ROE is driven by the margins the company makes, its turnover in terms of getting things sold, and its leverage. Yeah, margin times turnover times leverage. Hope that's okay. You remember your stuff here, guys. Margins, turnover, and leverage. You can imagine there being able to cancel out common factors leave you the right earnings after tax over equity, but looking at the driving force. I think that's a very important, guys, analysis. Please make sure you have mastered that. So, does that seemingly, guys, ring a bell? Does that seem all coming back to you there? I hope so. Because clearly we'll come into a lot of exam questions as you start practicing coming into this month of November. Right, top tips. Guys, do not focus on favourite topics. As I said before, the exam will try to give you a fair coverage of everything. So there's no point mastering one topic and totally ignoring another topic. You'll get burnt. We always say aim for a 70% performance for 100% of the material. Because if you get 70% in all of the topics, you will pass. But if you get 100% in one topic and fail, and then say you get 50 in some of them, you may well fail. So it really does matter that you're doing well enough in everything. That's key. Make sure you know your weightings, which we'll just examine in a second. The curriculum weightings are not even. So again, accounting and ethics were the biggest topics, and then you have other smaller topics, derivatives, for example. You might see that derivatives is quite technical. You have to understand quite a lot of information, and yet you're only getting 5%. You know, so you're thinking, well, 6 questions. You know, I want to give it the due importance, but I'm not getting a huge amount of material out of this, so I won't kill myself. You know, but for ethics, you can't really bomb ethics and expect to pass the exam. So allocate your study time accordingly. Yeah. To see there again, these are those topic weightings. So yes, of course, ethics and accounting, FR&A, do jump out as the big ones. And as I say, you will have your topics broken up in the exam, topic by topic. You don't have to sort of have them randomly given to you and sort of find your best area. If you know you're hot on an area, do that area first, for example, you know, get out of the way. But it will be a section like that for you. Yes, so just saying things like, you know, ethics so big, derivatives, only 5%, you know, alternatives. So certain areas thinking, well, I don't want to spend more time than I need to. I will get the exam questions in this weighting. Okay, so guys, have a look at that. Obviously, in my opinion anyway, most candidates will focus on the technical aspects, the accounting. You've got to do all the ethics examples to be hot there, to be ready for that. The quants is the next biggest, but as we say, use of the calculator efficiently should help you. And that links into the fixed income and the equities, really, because then you start to be able to, once you fixed income, pricing an asset, you're pricing equity with dividends, that all falls in quite nicely. And even the corporate finance falls in with NPV and IRR. So you get a lot of these topics coming in quite quickly. Once you master one thing, you can also master another thing quite fast. And these are the biggest weighted areas anyway, so that's quite good. Okay, do not underestimate ethics. I think we've just said that. Practice every question you can find. The main questions to find are in the curriculum readings. So volume 1 of the CFA Institute book has about up to sort of 150, 200 pages on just the ethical and professional standards. Now, although it's long, but those examples are really the only way to be thoroughly prepared for the exam. So please do your best, guys, to do all of that material. Read through the scenarios, and you just start to pick up little tricks that you say, right, I've seen a question like this before. I know what the institute thinks is the best answer. I may disagree, but I know what they think, and then you start getting into their mindset. That's when you're ready for the exam. Okay, practice all of their material for sure. That's the key. That's the key. So do not overlook the curriculum books. Yeah, even at this stage, aim to attempt all the questions from the institute. I would say, you know, the end of reading questions for all of their readings are excellent, thorough, and probably, if I'm honest, maybe even harder than the real exam. But then you're sure you're over prepared. That's great, isn't it? To be over prepared. Do their questions. Their solutions are comprehensive, so you can learn from the solutions. That's excellent as well. Do all of their questions, guys. End of chapter stuff there. Plus, of course, you have access to a mock exam from the institute. So, obviously, guys, if you paid your fee to the institute, you should be accessing those mock exams in this month now of November. So, go into your student toolkit, access all the free exams from the CFA Institute, yeah? And don't forget, guys, to take all your materials. Pencils, okay? You've got to take your own HB pencil. Rubber, of course, if you're making mistakes. Your ID. Passport, of course, right? Usually, take your passport. Calculator, right? Only the official calculator. Only the official calculator. I mean, if you want to take a spare calculator, makes sense, just in case, I don't know, you get some dodgy, calculator battery goes awry, take two. You can't borrow anything. That's the main thing. You can't borrow anything from in the exam hall. Okay, read the exam center rules wherever you're taking the exam. Make sure you've got everything. What are the rules regarding water? Maybe you can't have water at your desk. You can't have water. So know about this. Arrive on time for registration. You've got to be, guys, on time in the morning. Otherwise, you will be made to wait until the exam has started before you can go in and start. And you basically lose time on everybody there. So punctuality, well prepared, good night's sleep, right? All that, guys, is crucial. How are you traveling? Are you going to have to drive the exam? Are you taking public transport? Yeah, just the basics, guys. But if you don't do the checks there, you can come unstuck. And I must admit, I work always very tough for the exam, and myself, I try to make sure I was so prepared up until, say, the Thursday. And then I said, right, come Thursday, I'm going to wind down, because Friday should be a day where I just, get ready. Not studying like a maniac, not studying crazy, because if my energy levels aren't good for the Saturday, I know I can't perform well. I might fall sick, I might be stressed, I might be strained. So you've got to make sure that your energy levels are good in the final few days, especially the final day. So do then start to wind down, get a good night's sleep, right? And then just show what you can do. Okay, now guys, in terms of what we have for you, in case you are interested in consolidating with great sort of packages and material from Fitch Learning, we've got plenty here. Now, the online review package, of course, accessible from wherever you are in the world, is going to give you access to this. Now, this is instructor recordings, all the syllabus, all the readings for every topic area, gone through in detail by an expert instructor. Final countdown guideline means there's basically a mini sort of formulae and key facts and tables, great stuff to have in the final days. Review mind maps, how topics link together, and review summaries as well, just seeing all the pieces, how they fit together. Exam style questions, of course, plenty of those, and then mock exams. Now, you're going to get, the mock exams, if you want to just look at that in isolation. You see here 6-hour mock exams, 5 mock exams from us, online, with full summary and debriefs. I mean, we pride ourselves on that. Lots of thorough analysis in the answer section. So on top of what you get from the institute, you'll be getting at least 5 mock exams from Fitch Learning. Yeah, 6 hour times 5. If you want to come in and sit one of those exams in person, you could basically, if you're in London, you can come and do that. We'll basically mimic everything you'd have on the actual exam day, or indeed wherever you are in the world. If there's a centre, Fitch Learning Centre, you can go and do that. And that will give you the exam experience. Just filling in the ovals, filling in the sheet, and making sure you fill in those ovals correctly with a pencil so that the computer can scan it. Okay? Now, if you're interested in any of that, please visit this address here. That will explain all the conditions, and you'll be able to contact. I'll give you some details. I will contact one of our people in your location to ask well, is this available for me and how can I get that stuff? Please do, guys. You have a look at the names and email addresses here. Okay, hope that will be of some interest to you. But even if it's not, please remember all the tips we've talked about, because you deserve success after you've worked so hard. So think about, guys, maximizing your chances, as we've talked about, and with a calculator, with careful exam preparation in the last 2 weeks, keeping your energy levels up, and being efficient, knowing how topics will be tested, so you don't spend time what you don't need to do. Okay, so other than that, just seeing here, yes, can you use pens? I've got a question, guys, here. Can we use pens? No, guys, no pens, because it is a scanned exam. So a computer only can scan pencil markings. It has to be HP pencil. So no, please do not take any pens to the exam, as they will not allow you to use them in any way at all. Yes, the answer sheets that you get, the answer sheets basically are going to be a printout of 120 spaces, whereby with a pencil you simply need to colour in the oval relating to the ABC option that you're looking for. So that's it. You don't show any workings, you don't show any methodology, you're just saying, right, on myself, I know answer C is right, so you then need to fill in that oval with your pencil. That's the answer sheets that you are going to be given. And yes, it's just trying to make sure you are familiar with that. So if you come to one of our live exams, you will see that. If there are any more questions, I was happy to take that. But if you have, shall we say, gotten all the information you need, I wish you all the very best of luck for December, and possibly be seeing you around for level 2 or whatever else in the future. Hope to help you out at that time. All right, guys, thanks very much, and bye for now.